Welcome back to Iraqi Dinar News, where real updates meet clear explanations. Today, we dive into one of the most discussed financial revelations of the year. Hidden internal banking memos have surfaced, exposing what appears to be a coordinated plan for the upcoming exchange of the Iraqi dinar and Vietnamese dong. For years, the conversation around revaluation has lived in speculation, but these new details reveal something far more organized, an international network of banks quietly preparing for activation. From the United States to London, Dubai, and Singapore, systems are being synchronized for a rollout that could reshape the global currency landscape. This is not rumor, it is structured readiness, and every sign points toward real institutional movement. Earlier this week, credible insiders confirmed that several major American banks received communications listing the dinar and dong as active pending foreign currencies. That means for the first time in years, internal systems at top-tier banks like Chase, Wells Fargo, Bank of America, and Citibank now show placeholders for both IQD and VND. Such placeholders appear only when a bank's international network has been cleared for code recognition and settlement testing. These quiet adjustments are the technical foundation required before any public exchange can occur. While the general public cannot yet transact in these currencies, the preparation inside the banking infrastructure speaks volumes. Behind these adjustments lies a coordinated effort connecting domestic banks with international clearing channels. Chase reportedly upgraded foreign exchange terminals across multiple regions, while Wells Fargo implemented system-wide updates that mirror Chase's configuration. Bank of America expanded its foreign exchange division and introduced specialized teams focused on currency revaluation management. Citibank refined its private client operations to accommodate larger transactions through what insiders describe as a tiered redemption framework. At the same time, regional institutions such as Fifth Third Bank, TD Bank, and several credit unions began forming processing partnerships with Tier 1 institutions. Each connection forms part of a larger chain that allows smaller banks to forward transactions securely to centralized redemption centers. Outside the United States, identical preparations are taking place. In Dubai, private exchange groups report early notifications instructing them to stand by for rate realignments connected to Iraq and Vietnam. In London, both HSBC and Barclays have reportedly tested the IQD on internal trading terminals, an action that rarely happens without regulatory approval. In Canada, the Royal Bank and TD have upgraded databases to include the Dinar and Dong in standby status. Across Asia, Australia, and Singapore, currency dashboards have displayed short-term test entries for these codes, all within the same time frame as the US updates. The repetition of this pattern across continents suggests intentional synchronization, not coincidence. Analysts reviewing portions of the hidden memos note references to coordination under the Central Bank of Iraq and the State Bank of Vietnam. These communications mention integration with global settlement networks and outline four client categories: public exchange holders, contractual rate participants, international redemption clients, and wealth management onboarding. That final category implies banks expect some customers to experience large gains from these exchanges and are preparing teams to guide them responsibly. The depth and structure of these memos indicate institutional organization at a level far beyond rumor or speculation. Each institution appears to have received a staged activation plan with instructions for client verification, anti-fraud safeguards, and regulatory reporting. Priority will likely go to existing account holders with verified histories, allowing faster authentication. International partners like HSBC and TD are linking verification systems directly to U.S. Treasury compliance databases so that every transaction can be tracked securely. Plans also mention specialized facilities for high-value redemptions, secure financial centers equipped for privacy and advanced verification. This framework shows a deliberate and methodical rollout process designed to maintain control during a potentially high-volume event. The timing of these developments aligns with major economic upgrades in Iraq and Vietnam. Iraq has modernized its central banking infrastructure, fully linking to international SWIFT and digital payment systems. Vietnam has implemented real-time regional settlements, ensuring its banks can communicate instantly with partners abroad. Both nations have hosted meetings with IMF and World Bank teams throughout the past year, signaling oversight at a global level. These upgrades provide the technical backbone necessary for any new currency valuation to function on the world stage. Global financial observers describe this as monetary synchronization, the alignment of multiple nations and institutions in preparation for exchange rate adjustments. Once public rates become active, systems in the United States, Europe, and Asia will already be capable of processing those values instantly. For Dinar and Dong holders, this could mean immediate accessibility rather than prolonged waiting once official announcements occur. The groundwork for seamless operation is clearly visible through these consistent system changes. For anyone holding these currencies, preparation matters. Organize your notes carefully, keep them clean and flat, and store proof of purchase receipts. Make digital backups of every batch in case verification is required. Establish accounts with major banks known to participate in foreign exchange operations. Stay alert to official bank communications and avoid third-party brokers or online groups claiming to offer early access. Genuine banks will never request fees or mailed currency for processing. Exchanges will happen only in person under official supervision. Caution is vital. As anticipation rises, scams become more sophisticated. Fraudulent websites, social media profiles, and email invitations may appear promising early appointments or exclusive exchange opportunities. Ignore them. Authentic institutions communicate only through secure channels. Protecting your identity and your currency is the first step toward protecting your future returns. Knowledge and patience remain your greatest allies during this transition period. Different banks will handle this rollout in slightly different ways. Chase is expected to base limits on client tier levels, providing smoother experiences for established customers. Wells Fargo has prepared educational material to guide clients through the verification process. Bank of America may route larger exchanges through its international division, while smaller exchanges could occur directly at select branches. Citibank is focusing on contract-level transactions through its private client network, and international banks like HSBC or TD will operate under regional compliance guidelines synchronized with U.S. Treasury protocols. Together, these varied strategies ensure wide accessibility while maintaining strict security. Around the world, anticipation is rising. In the Middle East, particularly in Iraq, optimism has surged as the country continues implementing economic reforms and increasing its foreign reserves. Financial leaders there have hinted that Iraq's economy is entering a new era of monetary independence. Meanwhile, in Vietnam, authorities have announced the completion of a digital payment transformation project, linking Vietnamese banking systems directly with Asian regional settlement frameworks. Together, these developments provide the necessary backbone for a revaluation or international rate reset, something that can only happen when a currency is structurally ready for integration into the world market. In London, major currency desks are watching closely. Analysts there confirm that internal HSBC trading systems briefly displayed the IQD in their test platforms, a step typically reserved for currencies undergoing compliance review before public activation. In Canada, Royal Bank and TD have reportedly upgraded foreign exchange infrastructure to include the Dinar and Dong codes in standby mode. In the Asia-Pacific region, similar test integrations have been noted on commercial banking networks. This simultaneous alignment across global systems reinforces that we're witnessing more than coincidence. The world's financial architecture appears to be aligning in real time to accommodate these currencies once they go live. At this stage, one thing is clear: momentum is real. The convergence of technical updates, institutional memos, and global coordination signals preparation, not speculation. However, it's equally important for viewers to remain patient and disciplined. Market timelines are fluid, and official activation will only occur once all regulatory and security checks are complete. Banks move carefully in these matters to avoid volatility. But the groundwork, both technological and procedural, is unmistakably being laid. This is the most concrete movement the Dinar and Dong Exchange community has seen in decades. Financial historians note that major currency adjustments often follow periods of modernization and economic restructuring. Iraq and Vietnam both fit that profile today. Iraq's economy has steadily diversified beyond oil, while Vietnam continues to expand its manufacturing and export base. These fundamentals provide the stability necessary for a currency to gain international strength. If these hidden memos indeed reflect genuine institutional readiness, then both nations may be standing on the threshold of a historic monetary transition, one that could shift global trade balances and open new investment pathways across continents. What makes this moment extraordinary is the coordination behind it. The same terminology, identical database updates, and parallel timing across banks indicate centralized oversight. Currency experts suggest that global financial regulators are ensuring consistent standards so that once live rates are confirmed, every participating institution follows identical verification and reporting procedures. Such alignment has not been observed in previous foreign exchange transitions, marking this as a unique event in modern financial history. Economic reforms inside Iraq and Vietnam add further credibility. Iraq continues to expand its non-oil sectors, stabilizing its economy and strengthening reserves. Vietnam's manufacturing and export growth has accelerated, positioning it as one of Asia's most resilient emerging markets. Stable economic fundamentals create the right environment for a currency to gain international recognition. The combination of internal reforms and external coordination points toward a calculated, globally supported change rather than a spontaneous shift. In major financial centers like London, Toronto, Dubai, and Singapore, currency desks are quietly testing these same codes, ensuring software compatibility before public activation. This mirrored behavior across regions demonstrates preparedness at a worldwide scale. Analysts believe that once official rates are released, liquidity providers and central banks will already have synchronized their systems, minimizing volatility during the first hours of trading. The process appears designed to unfold smoothly rather than abruptly. The evidence now visible, technical adjustments, confirmed memos, synchronized updates represents genuine progress. Speculative chatter aside, the facts suggest that global institutions are aligning their infrastructures for an organized rollout. Timelines remain undisclosed, and no exact date can be guaranteed, but the consistent movements across multiple banks and regions make one point undeniable. Preparation is complete or nearing completion. Historically, significant currency changes follow modernization drives, and both Iraq and Vietnam have reached that stage. Each has upgraded financial transparency, digital infrastructure, and regulatory alignment. These reforms meet the prerequisites required for any nation to move from a closed-rate structure toward international convertibility. For investors and observers, this transition period marks the bridge between speculation and execution. What matters most now is composure. Markets respond best to informed patience, not impulsive reaction. The readiness we are witnessing today doesn't promise overnight change, but it does signify that institutions are no longer ignoring the possibility. Every software update, every internal communication, and every synchronized test brings the world closer to the point where theory becomes reality. In conclusion, the exposure of these hidden memos has transformed years of uncertainty into a clear picture of methodical preparation. The global banking network is positioned, systems are upgraded, and compliance structures are in place. Whether activation occurs next week or later this year, the mechanism to handle it already exists. This moment reflects more than financial hope. It represents a coordinated evolution in how nations integrate their currencies into the international system. For everyone watching, the best approach remains steady attention, careful planning, and continued awareness. The world is quietly preparing, and when the switch finally flips, those who are informed will be ready to navigate this historic change with confidence.